What's up, guys? This is my weekly breakdown for the week of 2/23. So, took a little break myself last week, but still took some trades. In terms of my portfolio right now for options, I'm pretty heavily positioned for memory, so we'll see if that gets going this week. We'll look deeper into that. Other than that, my options list is pretty empty, so we'll focus on memory. But economic events this week, I do not see much other than it looks like Thursday is going to be that big day with jobless claims, PCE. I believe there was PPI on Friday. I'm not totally sure if that is correct. So PPI is not really a big mover regardless. Thursday's that big day for economic events. But that real big event, all eyes will be on that NVDA. So, think more than just NVIDIA earnings. Obviously everyone's going to look at their earnings, but what are their CAPEX spendings going to be? That's going to be my big focus on their EPS report. If Meta, Amazon, all these other companies can spend $200, $300, $400 billion plus, I can only imagine what NVIDIA is willing to put in towards their AI infrastructure. So we'll see how that plays out, but keep an eye for those correlation plays. So AVGO, SMCI, if they use any server racks, VRT, anything in the AI infrastructure build out. So we'll see what they say though, and we'll see if they say anything about memory. Other than that, just a couple other earnings plays that aren't on here that, they're lower growth names, but I either own them or they're on my focus list for, future growth. So that's VST reporting this week, Baidu's reporting this week, CoreWeave, Rocket Lab, NRG Energy, Axon, FTAI, FSLR, Kratos, KTOS, Joby, Kava, Cypher, Duolingo, TMDX. TMDX is a big position of mine in my growth portfolio, so I'll be looking at that one. And ADMA as well, another lower cap pharmaceutical I own. But those are other focus EPS reports that I'll be looking at this week. So a busy week with earnings. Other than that, in terms of risk on, risk off, I think the action's been bullish in terms of we want to continue higher. I think we're still under key moving averages, so I can't really have a full bullish bias. I'll keep my bullish bias on memory, and I'll explain why. But other than that, it's still cautious for just putting on heavy trades. So let's get into some actual setups. So let's start with SPY and QQQ. Just take a look at how these are acting. All right, so you do get a couple things here, and it's setting up nice. Looking at this SPY candle, number one, near outside day, overtook the last 2 days of movement pretty much. On top of that, you had decreasing volume the entire time with the volume pop on that bar on Friday. So that's showing you, the bar is real, number one, but number two, also just the sheer size of it. It's showing you the possible power behind it as well. So SPY did close at a key level, giving you a really clear pivot. Stopped there, dropped 40, stopped here again, dropped another 20 almost. Got over it, couldn't do much. This level's been massive for it. So if you get a break above this and we start holding above, or even just a powerful follow through, it's going to set up that new leg in the market pretty clearly. So on top of that bar though, with the volume, you do get a break of the 9, you do get a break of the 50, you do get a break of the 21. I'm not sold yet because, if there's a gap down Sunday and then this bar closes right back under that monthly, back down through those moving averages, nothing's really changed yet. Once you get that follow through over 689, I think that's going to be the clearer picture. You'll have room to 700, I would assume there. It might still be a little choppy, but again, I don't trade SPY much. I use it more as a direction analysis to determine the overall strength of the market, and it helps you determine relative strength, which I'll show you with memory. But before we go there, let's just take a look at QQQ. So first sign is I think SPY is a little stronger than QQQ, but a couple good things from QQQ here. You don't have as clear decreasing volume in that volume pop as SPY, but it's there. You know, rode the MA down, actually made new lows, but couldn't get the volume going on those you know, down days. You still have that little volume pop on Friday, nice reclaim of the 9MA, great hold of a quarterly. You know, this quarterly level was massive for it. So, you know, good liquidity sweeps here, got out a bunch of sellers. Sellers weakened on this little downtrend. The pop is there. So, again, SPY still got that overhead level, and then now you factor in QQQ, you know, 21MA, 50MA, monthly levels. There's still multiple signs of projections. So, I'm not saying there's really trades on these individually, but just use them as market gauges for now until there's a little clearer setups. But, you know, understand there's rejection points ahead for both of them still. SPY through 690 would be a great tell. It'll give QQQ room to the 620, which is, you know, that could take a day or two. So could still give you a good trend. But all stuff to note. IWM you kind of play on the back burner with these two, but it's always good to look at. I mean, again, clear pivot on IWM. If you're telling me QQQ is running, SPY's running, IWM gets over 267.21 weekly level, that's a runway. You know, it really doesn't have many stopping points left. We can actually update this here. Let's do this and just get a clearer picture here, since these monthlies have closed. So when I'm marking up, so right now, my purple levels are monthly levels. So right now I'm kind of just going in, cleaning it up, go back down to a weekly, and I'll get some more major weekly pivots that I didn't have before, possibly, like these, which make a little more sense. So again, you still have that weekly pivot, and now I can see a couple more resistance points up above, but, you know, you get a little more of a runway when it starts cracking this 268, 267 area. So just something to note as well. Same volume structure as well. So you have confluence on all three of those major ETFs, which is a great sign. I do want to let's go over to some minerals for a second. Let's take a look at the silver and gold. So I don't have any levels on it, but you're looking at these follow-throughs here, you know. Major parabolic move, major parabolic sell-off, if I'm being honest. You know, that was certainly a blow off the top. Volume got stretched. You know, came up, made its low, came up, higher low, came up, MA's coiling, 21's there, 9MA's there. You don't have a crazy pop in volume, but it's there. And if SPY, QQQ, and IWM can get going, again, it's that confluence theme. If everything's moving, you know, there's that factor of, oh my God, what do I buy, sort of thing. And that's how you get bull runs, you know. Everything's going up, people are panic buying. It's no different than panic selling. Other than, you know, selling is obviously a lot faster than buying. So just something to keep in mind. This pivot point's here. Gold follows through with another candle, and you get SLV. Similar structure. Broke the 9MA. That's the main thing I'm looking at. So you can argue if SLV can get over that 21, both of them can start running towards that all-time high again. Got a couple gap fills. You also have really powerful liquidity within this area here. So, like, you know, again, this is why I make the argument. Stuff's setting up for the upside, but it might not be, it's not necessarily that clear runway yet. So you have to define, you know, that relative strength and what has the clear runway. And I'll go in more depth with that. But silver and gold setting up is another great sign for the market. If these start running, you know, there's more risk on. You know, it's better, it's a healthier environment. Let's take a look at, you know, since I've been talking about them, let's take a look at my memory trades right now. So let me actually just tell you exactly what I have. So I'm looking at, I have SMDKs, 700s, I have a couple MU 450s, and I have WDC 300 calls for all March 6th expiration. So let's just take a look at all of these. First things to know, SPX and QQQ. QQQ still hasn't reclaimed all its moving averages. SPX just managed to start tagging its moving averages on Friday. MU has been over its moving average for 7 days. It's been over all moving averages. SMDK, 1, 2, 3, 4, 5. I'm going to call it 6. I'm not going to say it's the cleanest, but it's over all the moving averages. WDC got a little shaky on Friday. I'll give you that. But 1, 2, 3, 4, 5, 6. This one was one of the stronger ones in the market, but point is, over the 9MA, 9 is stretched from the 21, 21 stretched from the 50. They're all clearly stronger than the broader market. 9 stretched from the 21, 21 stretched from the 50. I know MU got a little tight. Yeah, 9 and 21 got a little tight here, but it's been holding. This is a leader. And, you know, there's rumors of that pre-release coming, if that comes this week. Or also the other argument, if NVIDIA says anything related to memory and the true demand behind memory to back up what MU is saying, what SNDK is saying, these things have potential, you know, for that 40 to 50 point day again. Volume wasn't really amazing on MU. It's still decreasing, so you still need that one follow through bar. But point is, relative strength is clearly there, and you don't just have it on one name. You have it on the confluence of names for that entire theme. So that's stuff you want to look at when you're dictating your trades. You know, again, not good volume, so it's not fully out of the water yet. You need that follow through. But this is the play that I'm riding with right now in terms of, you know, what I think can lead next week. Possibly it's AI infrastructure after NVIDIA, but we will see. But yeah, let's go into some more individual setups now going into next week. So the goal here is just to kind of give you the structured idea that made the setup possible, and then where that entry is and the entry tactic behind it. You know, no more, no less. I'm not saying I end up taking all of these, but that's kind of why I make these videos. You know, there's plenty of times where I set up 10 to 15 things and I'm only able to watch 5. The 5 maybe work out. That's great, but that doesn't mean the 10 I didn't watch, you know, don't work out. Determine what entries are more comfortable for you, what setups are more comfortable for you. And, you know, by comfortable I mean how easy is it for you to understand? You know, how quickly does it come into your mind of what you need to do here? So that's just something to note when I'm saying these setups. So first thing here with POWL, this bar right here was a earnings gap up. So they blew out their earnings, and that's the gap up. So a couple things with gap ups and earnings. So gap ups, you have 3 things. There's really 2 that are known, but I made that third one. There's episodic pivots. So that's a large move off of news, earnings, any fundamental change in the company. It's not totally defined in terms of what makes the episodic pivot. It's easy to see in terms of the gap up, but the strength behind it is sometimes skewed, you know, other than just reading the news. Sorry, got some water. So yeah, as I was saying, you know, episodic pivot can work, but if you're not that good at dissecting the news or really understanding how to read news, which is totally understandable, sometimes it's tough to dictate what can really go. And then there's the other one, which is power earnings gaps, PEG. I'm assuming you've seen that before. If not, that's just when a stock has a outstanding earnings report, a great earnings report, and they gap up significantly. So the one thing that lacks with both of those is like the exact switch in that relative volume that you want to see. You know, volume is what moves markets. So sometimes you'll see a big volume bar like this, but it might not be truly representing the power of the day and the orders that we're in and what the volume really means. So a good way to do that is what I do is 10-300. So again, 10-300 is when a stock is going to gap up 10% or more on the day and have a 300% increase on their relative volume from the last 50 days. You could do the last 20 days. Last 50 days tends to be a little better representation. And then market cap I like to just set to be 1 billion or more. So I'm not getting, you know, complete, I'll call them penny stocks if they're under 1 billion market cap, but those are they're a little volatile for me. So the market cap can be up to you. But that 300% increase in volume is the really important part to dictate what's strong and what's not after a gap up. And I'm going to show you 2 examples. 2 examples of what worked and 1 example of what didn't work. So first one being POWL. So this one does have a setup along with it. So after a 10-300 day, so POWL popped up on my 10-300 screener. After a 10-300 day, you mark up the high volume high and the high volume close. So POWL, the high was here, the close was here, both marked up. What you want to see now develop is some sort of base, some sort of structure on low volume that bases over or near those high volume highs and high volume closes. So even if Powell based under here and then got back above, that's fine. This one did exactly what I wanted it to do. You know, if it was over the 9, that might be a little better. But you had the tight base, you had it try to follow through the high volume high. This is a clear trap after a move like this. Every single move higher, you have lower volume. You gotta notice stuff like that. Now, same thing here. Every move lower, it's structured, low volume. You're starting to get a slight pickup here, but I love this tag off the high volume close. This shows me it's ready, but not only does it show you it's ready, it gives you a clear stop loss. You know, so this is the 10-300 play you look for. Gave you the high volume close tag. I'm ideally going to look for an entry as close as I can to that 527. If it gets under it, stop loss, clean, easy, done. It's like, you know, it's a little far. I'm assuming these Powell premiums might have a decent spread too. So, you know, not totally sure I take this trade yet, but that's also for you guys to figure out. But the levels are there, the stop is there, the clear next target is there, and it's an extremely large range. I know it doesn't look like it on this chart, but you're looking at, you know, ideally 540 if you can get around for entry, 540 to 530. Your stop loss is at 527. Your target is at 569. So any break above that, you're starting to approach 600 again. I mean, that's a very, very, very large range. You can argue the stop's large as well. So again, we'll look at spreads, but that's an extremely large range. So something to note. Another one we have relating to that one. Let's see. VRT. So another one. Powerful earnings beat. Ridiculous earnings beat. Another one that popped up on the 10-300 screener. So here, let's go back. Right here. I know it's here, but this is actually the day of the movement. So that's okay. Let me bump this up. Hold on. Let's do this. There we go. Now we got that high volume close. Alright. These ones that are here, this one's probably from this area right here, because that was the follow through the next day, which is okay. But now I have that high volume close. The high volume high is here, so I'm really not going to mark it up. It's a really tight range. I'm just going to look at this high volume close, especially considering there's information around it already. Information meaning, you know, rejected off of it already, tested it already, rejected again, closed in between. I'm thinking if we do get back above that high volume close, so that 248, we should test 255 fairly quickly. So another one that gave you the 10-300 gap up, based tightly within that earnings day range. The second it gets over that high volume close, gives me a little clear entry, especially now that I have more information. You know, volume stayed tight and actually decreasing as price stayed tight. So any follow through here, especially with the volume pop, you know, it should ideally follow through past 255, but we'll see how it plays out. But now an example of one that, you know, gapped up significantly but wasn't 10-300. So just an example. You know, Meta had a fantastic earnings report, and it looks, from a volume perspective, it looks like no different than VRT, no different than Powell as well. So we look at these, you know, we think, okay, Meta's got to be a similar play. It's not. It gapped up on about, I believe, maybe 1.5 to 200% volume, which is decent. It's not bad. You need some sort of volume like that to get that pumped, but that 300% threshold, that's showing you there's real accumulation there. You know, 300% and above. You'll see some things have, you know, I've seen 700%. I've seen, you know, 500% multiple times. So it's possible, and then they happen more often than you think. You just have to look for them. So just something to note. In Meta, you get that fade. So just, again, a couple examples to go off of. Let's look at a couple more in depth. So more power and energy plays right now, which could be a good focus depending on what NVIDIA says as well. So we already looked at POWL. We'll look at NRG quick. NRG is in a really good base. So the issue is they do have earnings this week. So we will wait. Yeah, the 24th. So we will wait and see what happens, but fantastic base on this one. Let's look at BST, another one. gave you that kind of parabolic move, not parabolic, shouldn't say that, gave you that liquidity flush lower. I love that dip by right back up, and it's giving you a really good base off this quarterly. So again, you look for other energy correlations. For example, if NRG beats earnings, and then you see GEV moving, BE moving, VRT moving, POWL moving, those are all similar themes. So could dictate, for VST to follow through. But ideally, any entry above this quarterly pivot, you have a clear target of 176, clear defined stop near 169. You could wait for a close under it. You could be more aggressive too, and less aggressive on the stop, and use that 9MA as your pivot, because this does look like it's switching up. The only thing lacking here, you do have low volume on this entire run up, so you still need that switch in volume. Maybe a watch play for more, if you're more selective on your trades. Same thing with GEV, but these are just something to note with how strong they are. Look at how spread out the 9, 21, and 50 are on GEV. It's an amazing uptrend. So you look for stuff like this that's stronger than the market. They have more of a chance to follow through than not, and if they don't follow through, that's a good sign of where the market's at as well. So BE is interesting here. This is a massive level for it in terms of just a previous pivot. So if we look, tagged under that 21, tagged under that 9MA, tagged under 147.86. That's 3 forms of support it hit right here. Does it follow through under those 3 forms of support? I don't know. It's almost a similar situation to that SPY. Broke above all those resistance MAs, and does it hold? So it's interesting spots in the market. But ideally, the setup on BE would be here, this weekly level. There's just a clear pivot off this weekly, and especially after the flush with this bar, if there's any reclaim off that weekly, I don't see why over 156 doesn't give you that 167 fairly quickly. Then through there, 178 is fast. This thing's in a growth phase, so these movements can come really quickly as well. All right, let's look at. We already looked at VRT. You kind of got to look at that one. Let's just take a look at Rocket Lab, who does have earnings this week, but just another one coming off a major pivot point here. So let's see how they deliver on their earnings. But under the 21, under the 50, under the 9 barely. But how they react here can dictate trend for. Honestly, until their next earnings report, so a couple months. But yeah, under 70, this thing can start chopping around between 55 and 70. So we'll see what happens. Could bring that space sector down for sure. Another really good growth stock. So I don't see a completely clear entry. I really am liking this 284 quarterly pivot. Previous stops here off a big volume push. Stopped here again. Clear, almost quadruple bottom. There's just a very clear support here on ABAP. So if I get that follow through over 285, 295, 317, these targets are pretty decent after a large follow through down. So we'll keep an eye on it. But again, stuff like this, really good growth stocks, 13 billion market cap. That's what's giving you those volatile swings. But when you see volatile swings and you see them respecting levels like this and making structures, that's showing you the type of liquidity behind it, if that makes sense. It's showing you that there's buyers here. It's showing you that there's people still accumulating based off these structures. So it might not be ready to launch, but this is not going to be a $13 billion stock for the next couple of years. It will go much higher. And that's what this liquidity shows you. I know it might not make sense, but structure means good liquidity. So it's really something to remember. So let's see if ABAP gets over this 285 for a trade. That'd be a great reclaim of all the moving averages, maybe a volume pop, but we'll see what this one does. Intel's an interesting one. Intel, you have a decent, sorry for all these levels, you have a decent undercut reversal off this 50 MA. Nice low volume trickle down. Another one going into NVDA earnings. I don't know what Jensen says, but if he says anything related to these AI infrastructure plays and just the sheer scale of what's going on and demand, everything could get that pump up. So Intel's giving you a really good entry point here. You know, you could enter off this 44 and just stair step these targets, to be honest, and then you can almost use the 50 MA as your stop loss. You know, a really tight entry would be 44 itself, any close under there, but it's giving you that undercut of the 50 MA. You've had good reactions off of it last couple times, so something to note. LRCX, ASML, these are ones with just really, really tight structures, and again, it's giving you that confluence to NVIDIA. Everything's sort of setting up for that NVIDIA, so just something to keep an eye on. If LRCX can bounce right off this 242 and give you that back test off this breakout, and then follow through, you know, you have 247 first target, through there you have another $4 or $5. So just something to look at. Again, volume's not really great on any of these, but over the 9, over the 21, over the 50, that's first step. So LRCX can follow through. Let's look at another leader. Yeah, this one's been great. I haven't really caught it either. You know, I'd be interested in this back test at 241. This might be a little tight of an entry. You do have a good volume pop, good 3-day volume accumulation, bigger bars too. But I think it's a little aggressive. This Friday entry was really it over that monthly level, that follow through. Let me actually just look intraday. That might have given you a really, I don't know, that thing just ripped right through. It's fun. No play on COHR, but yeah, this one's a monster. Let's see TTMI as well. I know TTMI was, yeah, this one's getting, again, another one I've just kind of been staring at. It's making a great base, so I don't really regret it. I'd be really interested if you get that 106.68 back test and it holds and gives you that bounce. You have a clear stop loss. You know, tested, failed, got over, next day, failed. So got over, next day. If you get that test back down and it holds and keeps its structure, you know, look out to it. It might crack under and then manipulate and go right back over. Those are the entries, those undercuts, and then reclaims of those breakout levels. Those are clear entries. You know, and then again, you miss it, this 111 is a great breakout trade. It's all-time highs. Who knows where it can go? Ideally, all you want to do, if you do take this 111, you just want to see a couple days of a base. You know, if this happens tomorrow, it looks great, but it's becoming really aggressive after a 3-day run already. You know, 90 to 111. It's not a small move. 20% or so. So just stuff to keep in mind. But this base is great. So ideally, maybe a couple days, then we break out, but who knows? I'll be eyeing that monthly level. And if it does happen tomorrow, I'll probably go light just to manage risk and see how the trade plays out, because we are stretched from that moving average. VRT we did. WDC we kind of briefly looked at, but there's something to note here. So I know this candlestick looks really ugly on Friday, and it could follow through. Who knows? If you get that gap up though, I've seen these candlesticks multiple times on WDC. So let's see if I see a couple right here. So number one, right here, under the 9MA. If you are looking and you do not see any of this information, this looks ridiculously weak. And then it gaps up, gives you that follow through. Another one right here, ridiculously weak, gaps up, gives you the follow through. Right here. Same thing. Let's see if we can find another one. I mean, that was 3 right there. I'm pretty happy with that. But there's just a lot. And that, yeah, those 3 were fine, and they've happened recently too. So I'm not totally convinced on this bar yet. You know, I've seen it happen multiple times. So again, I'm not assuming, but if you do get that gap up and you get a push again over this 296, I don't see why you don't go to 307 and 310 fairly quickly, very quickly. I mean, it's happened twice, so 307 should almost be a given above it, or you can assume it is. You know, this should be a higher confidence trade. And then, you know, you can still keep your stops tight. If it closes under 296 for the day, get out. You know, obviously nothing just works perfectly, but you know, there's high confidence trades and there's not. You know, it's stopped every single time here, and almost every time it hasn't, it's gone to 307. It's just information. So keep an eye out for that little reversal back up here. I do want to look at Meta and Amazon because they seem to have really good day ones here. And by day one, I mean, clear downtrend, and then this kind of just looks like a day one for maybe a switch to an uptrend. You can get a really good pop in volume, but similar to WDC, tested 296, came down. Meta tested that 660, failed to stay over it, but if you get that bar on Monday and this follows through that 660, that's over the 9MA, that's over the 50, and you're heading towards the 21. You got lighter resistance levels, we'll call it, if they're monthlies. But you have room. These are $8 gaps between the monthlies, so just something to look out for. Ideally, we see that volume switch, but another one to note in that Mag 7 is Amazon too, so great test that 211. Wow, I didn't really notice that. Is that a bigger level? Yeah, wow, this 211 is massive. So a little bit of a Mag 7 theme here. I know Google and Apple actually had a pop too, so that's just extra fuel to the fire for SPX. But yeah, Amazon, decent run here. 196 to 210. That's not a small move. Great pop in volumes. You have that going for it, but just be a little cautious. I ideally don't really want to take this tomorrow if it breaks 211. I'm looking at these 2 wicks. You might get something like that. If this can make a couple tight bars, maybe break up Tuesday or Wednesday, even be a little better. But you do have a really large target through that 211, especially for Amazon. I mean, weeklies. If you catch a bar like that, those are, I don't even know, 4 to 10x. Honestly, $7 on Amazon's pretty crazy. So we'll see what it does, but ideally you really want to time this entry after a powerful move. Let me see. Let's just take a look at Google and Apple too. See, Google's more of a day one. Meta's more of a day one. Amazon's been like multiple days of a pretty strong rip. That's the issue. Apple's more of a day one. It's a great outside bar. Great undercut of a level as well. Just under those moving averages. But just something to note with Amazon. It's a little aggressive of an entry, so again, you could just go lighter on these trades, but they can still work. Another day one that I kind of noticed on Friday is this PDD. So I definitely wouldn't go aggressive regardless with what I do with this, because it just doesn't look strong yet. But finally trying to reclaim the 21 and the 9 and had a really good pop in volume. So this is another one. If PDD follows through on Monday or Tuesday and gets over that 106 fairly quickly, it's worth a shot for a swing on a lighter trade. But yeah, definitely don't go aggressive. So just to kind of recap though, that's all the main setups I saw for this week. But just to go over, I'll still be heavily focused on memory. I won't really be looking to add to my positions. I'll actually be looking to exit those positions hopefully by Friday. Keep an eye on energy names, keep an eye on AI infrastructure, keep an eye on memory after NVIDIA. How those move, you don't even have to watch the earnings call in the video. How those move will almost tell you what NVIDIA said or didn't say. So just something to know with NVIDIA earnings. A lot of good growth names reporting earnings this week, so go over those names, look at them. I'm going to be looking at which ones had over the top reports just for my notes. But yeah, watch SPY, watch QQQ, watch IWM. Some of my favorite setups, I guess, other than what I'm in, I really like that AVAV pivot. I really like that POWL pivot off that 10-300 trade. I really like BE as well if it does get back over that weekly. Intel could be a good one for smaller accounts as well. I probably won't take it. I might be interested in TTMI and DRT. There's a lot, but ideally I think main focus is AVAV, POWL, BE. I'm sort of sticking to those lower market cap names right now, just to see if we really do get that growth push. These can get pretty explosive fairly quickly, so we'll keep an eye out. But yeah, I'll be looking at everything I just said. I do have main focuses, but I'll still be looking at everything I just said. But yeah, hope you guys prep for the week. Have ideas before you go into the market on Monday. Set alerts, be prepared, have plans, have stops in mind, have targets in mind. Yeah, just be ready. But I'll talk to you guys later.